Hi everyone, good to have you here. This is E Plus Academic Resource Center where we take online tutorials and academic mentorship for senior secondary students and undergraduates, okay? Thank you for the likes, thank you for subscribing, thank you for inviting people to be part of what we're doing, okay? We really appreciate it. Okay, without further ado, let's get into what we have for you for today. Financial accounting, okay? In the previous classes, I'm going to add the previous class where we did some introduction about final account of a sole trader. I'm going to add that class to in the description section so that you get to follow up, okay? So I said we're going to be solving a comprehensive question today to help us understand the final account of a sole trader. And that is what we're about to do. So I have drafted a comprehensive question here. I'm going to share it with you on the screen, okay? Now, I'm going to share it with you on the screen. So I want to use a stone to kill like 2 or 3 birds, okay? I want to kill like 2 or 3 birds now. Now the first bird is I wanted to show you, I wanted to draft out the format for final account of a sole trader. Then the other part, I wanted us to solve a question. So what we are going to do now is we're going to use the question to know the format. As we are solving the question, as we are posting our entries, we are going to use those entries as the format. You know what we mean by format? As the format for the final account of a sole trader. So please pay attention as we are posting whatever entries we are making. That is the format for final account of a sole trader. So there are basically two accounts. Okay, we have what we call the profit or loss and other comprehensive income. Then we have the what financial statement. Okay, we have the profit or loss and other comprehensive income. Okay, then we have the financial position. Sorry, the financial position of the what sole trader. So we are going to start with this first. Are we together? Let's get down to work. So the question here said the following trial balance was extracted from the books of E Plus Enterprises on 31st December 2008. Now this is how you make your headings. Okay, before you start posting, this is how you make your headings. Now remember, we are using the vertical format, not the tabular format, not the T format. This is the vertical format. Okay. Now we say E Plus Enterprises, profit or loss and other comprehensive income for the year ended 31st December 2008. Then you underline. This is your heading, the name of the company and the account you're preparing. Then you have your naira sign. So let's start. So the first thing we have here, the first item we have here is sales. Okay? Now in your T format, the T format, this is the credit side, this is the debit side, this is the credit side, but we are not using the T format. We are using the vertical format. Okay? Now, the sales, we have sales here, how much? 517,900. 517,900. Now, we may not finish this posting today in one class. We may have part 2, part 3. I want to be very slow and consistent so that you don't miss any detail, so that you don't miss any part. So I need you to pay attention, ask questions where you don't understand, okay? All right, so we have sales, okay? This is your record of sales. Then what follows? Is there any return? Now, sales are the goods you sold, the commodities or the goods you sold, E plus. This is in the books of E plus. The books in the books of E plus Enterprises. So was there any return? Did customers return to us? You check. Returns is also, sales returns is also known as return inwards. They are the same thing. Sales return is the same thing as return inwards. So we have return inwards here, 7,300 less return inwards. Return inwards, 7,300. So you use your brackets to indicate the minus sign. That is how we do in accounting. You use your bracket to indicate a minus sign. Okay, so let's deduct. We have 5 517,900 minus 7,300, 510, 600. So these are our net sales. Net sales. These are our net sales. Okay? So that's that on that part. Then the next thing, you less what? Costs of sales. Less cost of sales. Are we together? So the first item here is what? Opening stock or opening inventory. Okay? Opening inventory. Stock is the old name. Inventory is the new name by IFRS, I think International Financial Reporting Standard. So we should be using inventory instead of stock. You understand? So on this first item here, we have opening stock. Now, I want to say something about inventory, whether opening or closing. Now, listen properly, please. Inventory. Now, when they appear on the trial balance, if it is not stated, you just see inventory on the trial balance, it indicates that that is opening inventory. The inventory you see at the footnotes or the additional information is closing inventory. Because remember I told you, additional information or footnotes, either you call them additional information or footnote, they are the same. So if I use one, please don't get confused. Information you see in the additional information must have been a transaction that has occurred after the trial balance has been drafted. So these are additional information that took place after the trial balance have been extracted. So when you see information in the footnote, they indicate that yes, these are additional information to the trial balance. So likely they are supposed, or they may appear twice, or they will appear, actually they will appear twice in the books. So either they appear in the trading, in the profits or loss part, or they appear in the comprehensive income and the statement of financial position. But just have it for examination purposes, unless you are otherwise informed or asked to do. But information in the additional information are supposed to appear twice in the books. So the inventory we have in the additional information is the closing inventory, while the one in the trial balance is what? The opening inventory. So opening inventory we have 34,300. 34,300. Okay, so we add purchase. Add purchases. So our purchase here we have purchase. We have, where is our purchase? 368,400. Now let's see if we have purchases, if we have drawings, if we have drawings. Okay, drawings. Let's see our addition. Okay, we have drawings in the trial balance. Let's see if we have any in the additional information. Okay, let's see. Drawings. Where are you? We have drawings. Let's see. Inventory, accrued expense, prepaid expense, reassurance, adjusted provision, commission, new charges, depreciation, rent, receipt. Okay, goods costing 1,200. Goods costing 1,200 were taken by the owner for private use. Now, this was yet to be recorded in the books. Now, goods withdrawn. I have emphasized on this in the previous classes when we were trying to do the subsidiary books. Goods withdrawn is different from cash withdrawn. Goods withdrawn is different from cash withdrawn for private use. Goods withdrawn is charged to purchase. When you buy something, when you make purchases, when you take out of the goods, it has affected the purchase. It's no longer the quantity you bought it. So goods withdrawn is affecting purchase. So you are going to deduct this amount from purchase. So purchases we have 368 400. 368 400 minus 1 2. 368 400 minus 1 2. Okay. 368 400 minus 1200. 367 200. 367 200. Do you understand what I did here? Goods withdrawn is charged, is affecting purchases, is charged on purchases. So goods withdrawn is going to affect purchases. That's why we are deducting it from purchase. Are we together? Please use the comment section if you don't understand so I can answer you. Okay, are we together? So let's move forward. So we have the next item is, okay, so we have, let's add up. Let's add up. We have 300 plus 367 200. 401 500. 401 500. So we less what? Return outward. Let's return outward. Return outward, how much do we have? 6,200. 6,200. Okay. Return outward is when you buy from suppliers, if there are bad ones, if some of the goods are not good, or maybe you find out that some of them had defection or one or the other, you return. That amount you return to your supplier is what we call return. That activity is what we call return outward. Why return inward are the people you sell to. When they return to you, this, like maybe for instance, if you sold 12 cartons of Indomie to your customers and they return 2, that's, they don't understand, these 2, they seem to be bad. That 2 they return to you is return inwards because it is on sales. That is why it is reducing from sale. That's why we are deducting it from sale. Why return outward, you deduct from purchases, because purchases has to do with you and your suppliers, while sales has to do with you and your customers, your debtors, people you are selling to. Do you get it? Okay, so let's deduct. So we have 401 500 minus 6,200, which is 395 300. Okay, then you add carriage inward. Carriage inward is the cost of bringing your goods into the warehouse or into your business premises. That is carriage inward. That's the cost. The cost of carriage. Carriage outward is when you take to your suppliers, when you take your goods out to supply or to sell or to do whatever. Once the goods leaves your premises or your warehouse, it's outward. Then when you bring in, it's carriage inward. Are we together? So you add carriage inward. So carriage inward here is, let me see. Carriage inward, 22,200. 22,200. Okay, so we add it. Let's add 22,200 plus equal to, okay, plus 22,200. 417,500. 417,500. Okay, so this is your costs of goods available for sale. Sorry, this is your cost of goods available for sale. Then you deduct closing stock from it. You deduct closing stock. Closing stock is you go to your footnotes, closing inventory or closing stock. We have 31,800. So closing stock will give you 417,500 minus 31,800. 385,700. So 385,700, you will push it to this side, push it to this column. You know, this place is small. This place is small. So that amount is supposed to be on this column, this side. Please take note. It's not supposed to be on this side. you move it to this place so that you deduct it from your net sales to get your gross profit. Are we together? So let me just write it here for clarity's sake. Please, the board is small. That's why I'm emphasizing on this, so that you don't make that mistake of doing it like that way. So 510. Okay, let me deduct it. First, 417 500 minus 31,800, 385 700, 385 700. So deduct it from this minus 510 600. You get 124 900. So gross profit is 124 900. Okay, please take notes. Are we together? Okay, so this is our closing stock. Okay, so this is our gross profit. So this the first part of our posting, our entry. So the second part, we are going to start with the expenses. We are going to post the expenses and income to get our net profit. Okay, so I'm going to stop here. This will be the part 1. Then part 2, we'll deal with the other parts of the entry, the posting. Then the final part will deal with the statement of financial position. I think that will be part 1, part 2, part 3. It's not too long, so just bear with us. It's because of how comprehensive the question is, okay? And besides, we're taking it bit by bit so that you get it properly. Please, wherever you don't understand in what we have just done, please do not hesitate to ask questions. You can reach me. My phone number is there. My WhatsApp number is there. Our email is there. You can reach us whichever way you want to. Okay, please subscribe if you haven't done so. Follow our other channels. Our TikTok handle is on the description section. Facebook page, Instagram. Please do well to follow us. If you know we're giving value, share this video so that other people who need it can benefit from it. Okay, again, let me just run through what we've just done, okay, so that you have a clearer understanding. Okay, so these are profit or loss and other comprehensive income that we're trying to solve here. Okay, so this is sales. These are our sales. Then you less sales return or return inwards. Out of this amount that we sold out, some amount will return to us. Okay, so we deduct it from the sales to get our net sales. Then less cost of goods sales. Now opening inventory, that is also known as opening stock. Then you add your purchase. You have an inventory, opening inventory. Then you bought some goods to add to it. That is what we did here. When you bought some goods to add to it, now out of those goods you bought, you took out goods worth 1,200 for your personal use. That is why we deducted this 1,2. If you check your footnote, you see 1,2 goods withdrawn for personal use. We deducted it from purchase to get our net purchase. Okay, so this is our net purchase. Net purchase. Just like we have net sales here. So these are net purchase. Then net purchase. Then did we return anyone to our suppliers? People who bought from? Yes, we will return goods worth 6,200. That is known as return outward. Okay, so 6,200, we deduct it from purchase to give us this value. Okay, then did we the cost of bringing those goods inside is what we refer to as carriage inward. We spent 22,200 to bring the goods inside, so we add it to what the net purchase and the return outward. Then anything we get is the cost of goods available for sale, so we are ready to make sales now. Okay, then we deduct our closing stock from it. Okay, after deducting the closing stock, then we got our what? Our gross profit. Are we together? So this is typically a trading analogy of a sole trader, a businessman. You can see everything is well arranged, everything is well understood. Even a typical business person, this is how he or she undergoes their business, or these are businesses. This is how they operate their businesses, from buying all those expenses you make, the carriage, the transportation fare, logistics and everything. You add and deduct, then get your what? Gross profit. But it doesn't end there. we have other addings and deductings to do that has to do with expenses. So in the next class, we're going to look into that in details. Thank you for staying to the end of the class. See you in the next class. Bye-bye for now.